Hi, welcome back everyone. In this video, we're going to do a stock analysis on SIA, our flagship airline of Singapore. By now, you would have heard of the recent FY 2022 and 23 full year results, that everyone is so excited about because SIA Group just achieved a record high 2.1 billion net profit for the year. This is all-time high since the 76-year history. So what we're going to do is that we're going to dive into some of the important highlights, what I personally like about SIA and don't like about the company. Now we look at their latest press release. SIA posted the highest net profit in 76-year history. This is achieved due to the strong demand, or what we call travel revenge spending, right? All right, and this is resulting in all the record revenue, operating profit, and even the passenger load factor. All right, and SIA also expecting near-term forward passenger sales. That means if you have pre-booked air tickets, like for me and my wife, they're already pre-booked to the next year itself. Or across maybe economy and business class, it remains robust. And on top of that, right, SIA proposed a final dividend of 28 cents per share. If you were to add up the 10 cents interim dividend, the total will be 38 cents per share. All right, and divided by the share price of $6, you're looking at around a 6+ dividend yield, which is pretty attractive. On top of that, just the last point for this press release is their operating statistics. So if I were to zoom in a bit, scroll down a bit, you can see that the passenger load factor right now is 85.4%, the highest in the group's history. For SIA, it's around 85.8%, and Scoot itself is 83.9%. And on top of that, when you look at the revenue per available seat kilometer, so this is the metric that they use to calculate for airlines, RAS, is around 10 cents, per kilometer. So this is also the highest yearly RAS in SIA's history. So all in all, is a very good set of results for SIA Group. Now let's talk about what I like about the company. First point is that SIA has managed to achieve a quick and strong recovery. Although deep down we all know that SIA will rebound given the revenge travel spending after COVID, right? In fact, a lot of people have commented they are all flying SQs these days. But it's another feat to achieve such a record high net profit, and is nothing short of amazing. What's more, SIA has recovered rapidly ahead of the industry with a 82% capacity and 114 destinations resumed in May 2023. All in all, is a testament to how the SIA CEO and management team they has pushed through the diversity and emerged stronger than before through all these different measures, like initiating the hiring freeze and the pay cuts during the pandemic, renegotiating the aircraft order delivery to defer all the over 4 billion of near-term capacity, and also cut away with all the discretionary expenditure and more. The next thing that I like is about how the management team decided to redeem the 2020 MCBs, or mandatory convertible bonds, in the past, and another 50% redemption of the 2021 MCBs on 26 June 2023. So it's upcoming, all right? So these bonds were previously issued to support the balance sheet amid the almost total shutdown of air travel during the pandemic. And through the gradual redemption of these convertible bonds, right, the different tranches, it will prevent the conversion of shares in future that will lead to a potential dilution for shareholders. So this is a very good corporate action move, if I were to say it. Okay, if you are enjoying this video right now, do help us to tap the like button and subscribe to the YouTube channel so that you will be notified of this kind of stock analysis and educational videos. So go ahead. I will wait for a while for you to do that. All right. And in return, I will share with you a financial meme. So let's come back to the video again. Moving on, I also like the visible growth plans for SIA. Okay, first, they are enhancing the flight experience through either reinvesting in the lounges, the in-flight products, as well as the dining concepts. But although for the dining part, right, it is quite subjective because many passengers are complaining about the in-flight meals. In fact, I also wanted to support SIA for my family trip, and I did a quick poll in Investing Note to see whether the quality of food is really dropping. Okay. Secondly, okay, SIA has also expanded their flight network to over 220 destinations through 33 code share partners. And this is probably the reason why I often find that, through Skyscanner, that SIA can do direct flights to many places that other airlines have to include a one stop or even two stops in between. So that's why, we chose SIA instead of the other airlines. And thirdly, I like how SIA is investing about $360 million for 25.1% stake in the enlarged Air Indian group. Given that India is the world's most populous country now, okay, and how the new Air India group will be a much bigger player with a 26% market share in the Indian aviation market, the growth prospects from this investment itself will be astonishing. Okay, and perhaps the last positive point that I want to make is about their valuations. So when we take a look at their adjusted NAV per share, adjusted here refers to the total shares assuming we convert all the convertible bonds. All right. It is now trading at around $3.72. If we were to take a $6 plus share price divided by their adjusted NAV of $3.70, it will translate to around 0.7 times price to book ratio. And comparing it against other regional airlines, SIA seems to be trading at much lower price to book valuations versus the peers. If you want to also try out this stock analysis tool called Simply Wall Street, okay, you can just click on the link below to get a free trial and test it out. All right, so we also need a balanced view, right? It cannot be all positive things and developments about SIA. So now let me share what I don't like about the company as well. So first thing, what I personally don't like about the company is the capex heavy business model. So this has nothing to do with SIA in particular, but the whole airline industry. So if you were to look at SIA's projected capital expenditure in the table below, billions of dollars have to be spent on aircraft and other stuff on a year-to-year basis for them to continue their BAU, business as usual. So on top of that, okay, their cost to revenue percentage is always consistently very high at above 80%, even before COVID pandemic. In short, right, every time there's profit to be made, there's cash flow, SIA will need to choose between, buying of new aircraft or paying down their debt burden or give out dividends to the shareholders. Okay. And on the next point I want to make is that for SIA itself, all right, even though they have achieved a record high and things like that, it may be a one-time off, all right, in my perspective, because uh, everyone who wanted to travel has already traveled, okay, and in times of this high interest rates, high unemployment around the world, so the growth may taper off. And now you may argue that SIA are giving very good dividends, around 6%. So another point I want to make is that in the near term, okay, maybe 1 year or 2 years later, SIA may face heavy competition or even a price war again. So this current blowout year of rebound may really be a one-time off because Singapore really manages the COVID much better than other countries. All right. And some things that I can think of that may trigger this kind of competition is that maybe AirAsia may come in with their budget airlines and a lot of marketing promotions. Chinese airlines expanding their reach given that they are opening up their country again, and also many customers after traveling for a while they want to tighten their pockets due to the high inflation and so forth. So at the end, if you were to ask me whether SIA can go back to their glory days of like share price $10, $11, I would say I'm not sure. It depends highly on whether SIA can grow their NAV per share from the current adjusted $3.72 to around $10 plus NAV during their heydays. All right, 4, 5, 6 years ago. So all I can say is that it will probably take some time for SIA shareholders. Anyway, if you find this video helpful for you, I would appreciate if you can help me to tap the like button and subscribe to my YouTube channel for more Singapore and US stocks analysis. Next up, if you want to check out our recent interview with First REIT CEO on why their growth 2.0 strategy is gaining traction, you can check this video over here. So I will see you next time. Thanks for watching and ciao.